Okay, hello traders, and welcome to this live intraday strategy webinar. Today is Wednesday, December 18th, and this will be our final intraday strategy webinar for the year of 2019. Closing out strong. So lots to discuss here today. Pooja, Jay, great to see you guys in the room. On the menu, we'll go pretty quick. DXY, Kiwi dollar, dollar CAD, Aussie dollar, all the commodity trades from last night. Kind of stalling down here, but we're still looking for that exhaustion point. Dollar Swiss, sterling dollar, continuing lower on sterling. Take a look at euro, dollar, yen, and we'll wrap it up with gold. So any other questions or trade setups you guys want to review? As always, feel free to throw them on the message board at any time. So just a quick glance at the docket today, guys. Heading into the tail end of the week here, we still have GDP for New Zealand on tap tonight. And then later tonight, we also have the Aussie employment numbers. So nice little track of data into the commodity sector. Here's what we look like on the DXY. So remember that we came into the start of the week, guys, talking about that 96.80 level. It's the 618 of the yearly range. We had dipped below it on last week's decline, but held and closed well above that confluence region, former slope or current operative sliding parallel there in the 618. So this is still the focus range, right? Heading into the close of the year. 96.80 on the downside, 97.87 on the upside. I want to see this range clear to the downside, ideally. One thing we're looking at is also this momentum consolidation, right? Last week, even when it looked like it was breaking that, pulled right back into the close, and here we are yet again, still in that contraction in momentum. So lots to take a look at. Good morning, Eman. Great to see you in the room. Lots to focus on here into the close. As it stands right now, here's that 96.80 level. Okay, that's 618. Here's the rebound. We were looking for resistance along that former parallel. We broke through. Could see some more upside even until that 97.87. Now, the bottom of that resistance range is 97.71. Decent pivot there. Former swing lows from last month. Former swing highs from March, if I'm not mistaken. Yep. And the actual 2018 high. So that whole zone has a little bit more room on the daily chart. Here's the intraday. And here is what we look like on DXY. Into the close of last week. So I haven't updated you guys here yet, but all the same levels heading into NFPs or FOMC, right? There's the breakdown. There's the August low. We pivoted below that, tagged that 618, and then came right back. So we're right back where we started, 97.30 right here. We just broke through this now. This is still the key resistance zone into 97.71. So still think you get some more upside on this. The play on this would be on some of the dollar crosses that we've been looking at, specifically some of the commodity currencies. Any questions on this before we move off? Wish I had a cleaner structure as far as the actual decline is concerned. I played with this last night, toggling this stretch using the actual stretch high instead of that gap high we made into the knee weekly open a couple weeks back. Either way, you're still leaves the opportunity open for further advances near term. Here's what it looks like on the euro. Okay. Key resistance range there. You guys know we've been talking about that one for a while. 111.87, 112.09. Big resistance zone. Failure there on Friday really had me looking for the pullback early in the week. It took a little bit to get going, but we're still seeing that start to materialize a little bit here. So I'm liking it. I don't want to get too aggressive on it. Eman says I'm short euro since 111.72. Not bad. Nice entry. Nice entry. So before we jump into the intraday, just want to highlight this weekly chart. No change on this, guys. The basic critical zone heading into the close of the year, 109.94 into 111.86. A quick note, I see your comment there. I will be doing one more webinar on daily effects on the 30th. So welcome you guys there on Monday the 30th, 8:30, same time slot, just to kind of give you a little bit longer term horizon heading into the open of 2020, geez. But on this euro, very clear levels as far as where we're looking for on the weekly chart. Here's euro on the daily. Okay, so beautiful reversal off of a major pivot zone, 111.86, 112. There it was. Here's a slope, again, off the 2018 highs. Okay, 2-point touch, so I didn't want to get too crazy about it, but it converges on that same region. So you saw that whiplash there. Here's the push back below the initial monthly opening range highs. Could see a little bit more downside here. Ultimately, I'm looking for support basically into this zone. The current 25% parallel of the operative pitchfork, and then just a former sliding parallel that gave us the breakout last week. So that's sort of the idea on the daily chart. Here's the intraday. Okay, so Eman, your first downside target is basically right here still, 111.09 into 111.04. Okay, really nice pivot zone, former swing high from the September stretch there. Really nice pivots down here. If you go down even further, it's the swing low that we made back in May of this year. So very nice pivot zone, right? We ran into this as resistance on the way up in December, resistance again. That was the breakout, gave you the accelerated rally. Here it is, just lower is the parallel. So I'm looking for sort of exhaustion into this region. I highlighted yesterday that 110.65 is my bullish inval. So even if we were to get a stretch into one of these targets, still looking for that possible downside exhaustion, bullish inval is above 110.65. As long as we stay above this, within this formation, it's still a constructive trade. So just be mindful of this 111 handle here, Eman, near term. I don't know if you want to shave a little off or if you want to just start to adjust your stops, but look for a reaction here. If we pivot lower, the risk of 110.90, 110.65 is there, okay? But I'd be watching it very closely. Questions on euro dollar. Okay, we'll keep my eye to cut half. Cheers, Eman. Nice trade. Well done. One, that's number 2. Okay, let's jump into last night's update. So you're more than welcome. So here's what I'm looking at with the COM currencies. Really interesting to me last night, which was the 18th. Here's what we were looking at. So Kiwi, on the longer term charts, was coming into a pretty nice area of resistance. Here's Kiwi on the weekly. This pitchfork, again, some poetic licenses there as far as putting the slope, has continued to offer some really nice pivots on the way down, on the way up, the accelerated break. Here was resistance. Now, 66.33 ends up being the July reversal week close. 66.60 ends up being the 618 of the yearly range. Nice zone. Just ahead of that, you have basic slope. Okay, so the exhaustive trade is what we were sort of looking for. It had a 4-5 week stretch to the upside on the back of this. Momentum at 60 into the open of the week. I mean, there was a lot to suggest that we should be looking for some sort of exhaustive trade. Here's what it looked like on the daily chart. Okay, so that slope again, there was the breakout of the downslope we were initially following off the highs we made in July. Here's that upper parallel. Resistance, 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 unable to make any progress above or close. Here's the pullback. Now, Kiwi's fizzling out. The downside's fizzling out pretty quick. I would have wanted to see a tag of the median line. We could still get it. We do have, like I said, New Zealand GDP numbers out later this afternoon, expecting a print of 2.3% down, up from a previous read of 2.1. So, maybe this thing doesn't get to settle lower. End of the day, we're looking for a reset to be able to get back on the long side. I just can't get comfortable trying to press along from here again. So I'm still looking lower. Here's what it looks like on the intraday. Okay. Here's the 240s. This is what I showed you on the report. It's kind of like a pretty clean false break type of scenario to the upside on Friday. We closed back below the upper parallel into the start of the week. And as we noted, we were looking for exhaustion again ahead of that upper parallel. So it pushed a little bit higher into the start of the week, failed below the upper parallel. Here's the drawdown. 65.66, okay. Next downside target, 65.33. That would be just a basic 236. So I'm still holding out for a possible tag of 65.30. Bullish invalidation for the current trend that we're in is still down at 64.70. So I'm willing to, sit in this one for a while, see if we can't get that extension. But this has been a pretty clean formation. Okay, sliding parallel catching the lows, upper parallel catching the highs. A little false break action here. Looking for a drag down near 65.33. Parallel comes in like 65.43, about 10 pips higher. Questions on Kiwi? I'm also short. Oh, so Iman, you and Pooja are both in that same trade, huh? Short gold from 1479. Shall I cut half here? 1471 near the ML. It's an aggressive trade. Need your guidance, please. So Iman, let's take a look at gold now, because both you guys and Pooja are both, it seems, involved in that trade. So I'll jump ship real quick. Let's take a look. So first of all, well done, both of you. Love the entries, well executed. Yeah, here's what I got to say about gold. So before we get into the intraday, you guys know this chart. I'm just going to show it to you one more time since it's the last webinar of the year. Guys, there's nothing different on this. The only thing we're focused on into the close of the year is the break of the 1451, 1490 range right here. I'm of the believer, and again, Iman and Pooja, this is just my humble opinion, ladies. I'm of the opinion that if we fail at 1488, if this is a fail here, then we need to see a new low first before we register resumption. So I'm of the mindset that there is still some downside potential here. That's the weekly chart though. This thing could go anywhere 1451, 1490 and still be in the same setup on the weekly. Okay, so just keep that in mind. Broader bullish inval is still down at 1405. So even if we get that washout. Here's gold on the daily. Okay, this consolidation, this near-term consolidation, I'd be surprised if this bottomed out and then this near-term wedge formation just broke higher. Again, my humble opinion. So I'm of the mindset that you look for a drop towards monthly open support, which comes in at 1463. That converges on basic trendline support off that late month low November. So it gets a little bit deeper of a cut here before you even start to test near-term uptrend support, which is again at the monthly open. Okay. Also keeping in mind that that resistance trigger we're looking at in the daily chart, that's a false trigger if I ever saw one. Right? So it's clear. If we clear 1490, you're off to the races. You look back for a rally towards 1520. Below that region, you're below downtrend resistance and below uptrend resistance, highlighting the fact that resistance is resistance, right? So the broader picture from a 100 feet up, not 1,000, a daily chart, right? Here's what it looks like on the intraday. So we were talking, Pooja, right before the webinar, we were trading right here. So that was the level I was telling you about. That's the median line that we've been following off the lows. This now constitutes a break of the objective monthly opening range, weekly opening range lows. So you should be looking for that downside stretch. Again, what I was telling you, you were talking about 1463, which is the monthly open. Here's what I was telling you about 1465. There's Friday's low, and it converges on upslope support for this pitchfork we've been working off of, this modified pitchfork off the lows. This is off the November lows, right? So that parallel comes in right here, also down trend support. So the 75% line of this pitchfork, right, converges right there as well. So it's the only caveat, it's the only interruption I have ahead of 1463, Pooja, is that Friday low. So just watch that zone there. Specifically, if it heads towards like into Asia tonight, even on time, it would even converge even harder there. So just something I take note of. But at this point, you'd want to hold weekly open resistance, right? On any kickbacks, so any recoveries, I'd want to see resistance hold here. With, again, I'm not sure, 1479 entry on yours. I mean, that's, man, for me, that would be like, if you want to cut it close and kind of lock in some profit, it'd be just above that weekly open, but it would need to be against this high to be any type of respectable stop, and that would put you pretty much at break even. Pooja, same with yours. Again, just guys, not a trade recommendation, just my humble opinion, but yeah, I'd probably go break even if anything on that one. look for a reaction at 1465, 1463 weekly, monthly open. And then the key support zone is still going to be that 1460. Just straight up. It's the lower parallel. Last week's low, or this is the monthly lows, right? Nope. The swing lows from the 6th and the 8th both converge on slope. But to even talk about this target, I'd want to see a reaction here. Again, ideal scenario, I mean, just again, my humble opinion, I'll tell you that, is you see this come down, right? You pull into this zone, failure again at the weekly open, then maybe one last drawdown here. And I honestly, I want to see a pivot at 1458, 1460. And I just wrote the forecast for daily FX, guys. This is the chart that's going to be on there and published later, into the open of January. They got to go through compliance and it stays a couple of days there. So I don't know when it'll actually be published, but this is what will be on there. The initial focus for the year is this. Broader trade remains constructive, but I can't rule out another drop into the lows. The only caveat is this. Cyclically speaking, from a technical standpoint, if you're looking at the seasonalities, it's actually pretty decent into the start of the year. We can even just look back at the last couple of years here. Here's your 2015 open. You rally for the first 3 weeks of January. Here's your 2016 open. That was, off the low. So that was obviously a much more substantiated rally. Here's your 2017 open. Here's your 2018 open. Even on a year where gold traded lower on the year, we still ripped into the January, February highs of the year and then dropped. Here's this year into the February highs. Again, you made a 5% move higher before covering that range and inevitably moving higher. So look, that's not to say that's causation, but it'd be foolish for me to kind of just go into the start of the year with a carte blanche bearish bias. I think you need to be mindful. If we pivot back above 1490, you need to stay on the sidelines. If we break below 1450, I think you get a beautiful entry some point in January, February, and that might be the vaulting point to get you into new highs on gold. So Pooja says, very mindful of seasonalities in gold, seems to respond well to that too. Yeah, right? So, hey, all we can do is make a decision based on the evidence that's provided, and all things held constant. I do want to see this thing start to base into the start of Q1. We'll see if we can't get some sort of near-term recovery in gold prices here. Topside targets, by the way, if we clear 1490, got to watch that 1526, 1522 pivot zone. Remember the 2012, 2011 swing lows. Beautiful zone. That's your next hurdle, 1558. Next big zone to the upside is 1586. That's the 618 of the entire drop from the record highs. Hasn't been tested yet. Might be on mark into the start of 2019. I keep saying 2019, 2020. My position is too aggressive too, and seasonality was the deciding factor in that size. All right. Yeah, so just keep that in mind, Pooja. Both you guys have really nice entries on that, but don't get too overzealous on it. All right, that is number 4. Number 5, let's kick it back to last night's update on dollar CAD. Iman says, okay, amazing, Michael. Thanks, Michael. Satisfied. I will cut the half and the rest in the market to see what price will do at the monthly open at 1464. Yeah, you got it. Watch that 1465 just for a pivot, okay? Just see if you can't see some sort of reaction here. But yeah, the monthly open on the daily charts just primed. If we get down there, I would love to see some sort of more concrete pivot off that zone. Dollar CAD. Here's what Loonie looks like. I'll be putting a piece off on Daily FX shortly after this webinar. So look, I was looking for a larger recovery, but as I said yesterday, the weekly opening range was pretty well defined. Here's what Loonie looks like on the weekly chart. So the 75% parallel of the pitchfork held on this stretch in November, December into the open. Here's the pull lower, a basic 618 retracement, 3151. We're looking for a weekly close below that, okay? And then you're looking for a drop right back into the same key, 3050, 3058, low week reversal close, and a 38.2 retracement of the advance off the lows in 2017. Really nice spot. Really nice spot. So that's all I got to say on the weekly charts. There's not much to write home about here. Daily, also pretty precarious. Here's the median line. Sat here for 3 days, unable to close. Looks like we're going to try to make another push here now. There's not really much here either on this chart, guys. The only thing I wanted to highlight is monthly open resistance at 32.70. That's my near-term bearish inval. Next downside targets, 30.86 and 30.50. The October low day close and the 38.2 that we just discussed on the weekly charts. All right. Here's Looney on the intraday, and here's what we've been focused on. On the update. So here's dollar CAD last night. As I noted, we made a full round trip. Here's your weekly open. You stab into a high, slam lower, test that high yesterday. The weekly opening range is set. We're looking for a break of this range. As I noted, near-term resistance at the weekly open. Here's the level that would put us on a little bit more constructive path. I was looking for shorts off one of these two levels, 32.05 or 32.20 if we get it. Now, it's still possible, but if we settle the U.S. below this slope, it definitely leaves the risk for resumption of the downtrend. And ultimately, we were looking to get on the short side of this trade, right? CPI numbers came in at 1.9% this morning at the start of this webinar. No change there. Nothing new. It's kind of just doing its thing. Okay, so here's the failure. We're still in the weekly opening range. Look, if it breaks 31.15, guys, 31 and 30.86, I know they're very close targets, but we still need to be mindful of them. Why? Well, this is a basic and objective. 2 equal legs off the high gives you 31. And again, the October low day close, 30.86. Those lateral levels of technical significance inherently will be levels that I'll always be looking at. So I'm not in this. I was looking for a rally higher to get short. I'm kind of ticked off here, but if it breaks the lows, guys, don't go chasing. It's really important that we keep that in mind, guys. Specifically into the end of the year and the holidays are coming. You're feeling good, you're feeling a little feisty. You want to jump into a position because the technical clarity is there. We have to maintain discipline. So while our bias might be correct and while the levels may be correct, if there's not a viable trade opportunity with a well-defined risk and associated risk to reward ratio, you're just chasing. So again, gunshot to my head. I want to see 31.15 tags. 30.86 is the tag that really needs to break to validate acceleration. Remember, downside break of the descending channel should have been an accelerated move. So the fact that we recovered back above is what have me initially looking for a larger recovery here. All things held constant, look for a break of the weekly opening range. Eman says, done. Pooja says, thanks for the detailed look. You always give us clarity. Cheers, Pooja. I appreciate that. Would you go long here? Why would you be saying that? Well, let me take that back. I know why you might be saying that. You might be saying, is this a good fade here against this low? Look, that might be a decent position heading into the U.S. trade session, but I would need to see some pretty compelling factors to put me into a trade like that. You know what I mean? This is the 60-minute. I'd need some slope, something. So 1618 extension of the decline from that high we just made takes you 31.12. 31.15 is the November low and the weekly opening range low. Yeah, I can't say that I would try to take a long. No. Listen, if it drops and you see a spoik, you can tell it's towards the end of the month and year, huh? A spike towards the opening range lows, the monthly range lows. If it comes in the confluence of this zone and you find some sort of recovery, that would be the low I would trade against. But on initial approach, for me to trade just against that low, it's kind of rich for me. especially because there's no upslope. You know what I mean? If there was an upslope and it was coming near here, yeah, that's a different ball game. But just to kind of try to fade low against that, I'd need to see something, like I said, a little bit more compelling on the near term. Here's the 30-minute. All right, might be onto something here. Watch that into the open. Watch that into the open. I don't like they didn't get any resistance here, but you're working with the broader dominant trend line off the December highs. And the opening range high for the week. So I would dismiss that you didn't get to the upper parallel of that. But the pivots below the 25% line, pivot break there, could be something to watch for. Could be something to watch for. To answer your question on whether you would try to short that or try to fade that move rather to the upside, that low we just made would essentially need to hold. But guys, this is a real short-term trend line. If it breaks that low into the U.S. Open, finito. You look for 31.19, 31.12, 31.15. Make sense? All right, so that is dollar CAD heading into latter part of the week here. Next up on tap is Aussie 6. So Aussie got the better playback as far as the kickback. Remember, Kiwi coming off resistance, we were looking lower. Dollar CAD coming off support, we were looking for a little bit of rebound higher. Here's Aussie coming off resistance. And this was the best play this week as far as the intraday charts that were concerned that we posted on Sunday. Here's what Aussie looked like last night. Here's what it looked like on the open for the week, though. Okay, as we opened the week, it was right on the back of Friday's move, which was outstanding. Okay, why? Well, we posted a pretty big, massive reversal candle right off of Fibonacci resistance and right off of slope resistance. And it was seen more clearly here on the daily chart. Here's what it looked like. Okay, you had the 618 retracement, a decline off the highs that you made just in July, okay, of this year. Then you had the upper parallel. This is the 75% line for the slope. Perfect touch there. And a big old outside reversal candle on Friday shifted the focus lower. So heading into the start of this week, our focus was on a simple failure point ahead of the upper parallel. We said, look, if this thing is legit, okay, and this break and reversal off of key confluence resistance at 69.23, 69.27 on Friday, that's legit. We should see failure ahead of that upper parallel. A downside break of Friday's low at 68.63 would have us looking for a tag of the median line, and then 68.36, which is a basic 38.2. So here we are now. We took out, the weekly open, took out Friday's low, 68.63. Took out the median line, which was pretty good near 68.50, turning just pips from that basic 38.2 at 68.36. Look, I still think you get the move lower. I am mindful of the fact that there's clear-cut divergence here, and most evident on the line chart, as I always tell you guys, price action with a lower low, the oscillator with a higher low. These subtle divergences always have me, make the hairs on the back of my neck stand. So just, be mindful of that. Ideal scenario, even if you get a corrective bounce towards Friday, bearish invalidations weekly open. I want to see a tag of 68.36, if not ideally this zone here. And you guys all know, for those of you who've been with me for a while, my favorite Fibonacci confluence zones. Always has been, always will be. 618 off the low and 100% off the high. When those convergences map up, especially with slope, they tend to be pretty dope. Okay, you can put that on paper. Big zone, okay, because you got your downslope and the upslope. 68.24, 68.22 on a max stretch. This is still going to be your initial target. I'd be looking for exhaustion here. Bullish inval 68. Okay. Um, still like it. Still like it. I think Aussie's a decent play. We've been waiting for this bounce for some time. Kind of teetering out here a little bit, but here's what the weekly chart, just to give you a quick reference again, where we failed. Same zone we failed on the October stretch, same zone we failed on the November stretch, 618 retracement, 69.27. Want to stay constructive above 68. Questions on Aussie? Number 6. Okay, number 7, Swissy. So has been, kind of decent. I was sitting on the desk in the city yesterday, and we are just talking um, with a couple guys, a couple of friends of my buddies of mine on the desks in New York, and one of the guys was talking about the fact that the yearly open break here is, clearly bearish, and dollar Swiss, should be a really pretty clean move down to 97. Listen, we're not arguing that. But my argument to him yesterday was watch this 98 handle, not because it's a big figure, not because, it's a psychological barrier and all the, diarrhea people throw out as like, okay, this is just a level to watch just because. No, there's actually something here, okay? Basic pitchfork off the high, low, high. There's the lower parallel, caught support last week, caught support last week, caught support last week, caught support yesterday. Okay, sprinkle some love on that. You got the 618 retracement from the advance off the low you had in August. That entire rally, here's the first test of the 618. Confluence support, 9,800. So he's probably going to wake up this morning. I'm just waiting for a text from him. He's probably going to be pretty ticked off on me, but here's the bounce. Now look, you only got like 20 pips off the low here. It's not a life-changing trade, but the point being, this is the first area of support that you'd expect to see. Here's what it looks like on the daily chart. Nothing fancy, guys. Basic pitchfork off the highs. These hidden support and resistance levels oftentimes will be overlooked by a lot of people. Really nice spot. Resistance, critical resistance, is still going to be 98.38, the same level we were watching as support back on the drop here in September, back on the drop here in October, and initially on the drop in December until we finally broke. Near-term resistance, bullish inval, 98.78, or bearish inval rather, 98.78. Okay, a break lower from here, which we inevitably do want. I still think you can get some more upside here first, but inevitably once we pivot below 98, you're gonna have to get a little creative. I don't have any major support till 97.12, but that's a far away from where we are now. 98.40 maybe. I don't know if I want to put too much emphasis on this slope because it's just a parallel, right? This is where the slope is derived from, a parallel extending off that low that we made in September of last year. Decent, but I don't want to put too much emphasis on this. So the next major lateral level is 97.38 on the downside. The scalp has 97.71 and 97.38. Quick adjustment to those levels just for the new low that we registered in overnight. Brings that 38.2 down to 98, 82. So remember, this is not only the yearly objective open and the 50% retracement, but it's now also the objective weekly opening range highs. If we get through this, I think you get a larger recovery. Now, this is the favored move, like I said, in some of the, it's not a commodity currency, but out of the ones that we're looking at, this is one of the favored moves if we do see dollar strength. Because despite some of the losses that we saw late last week, Swissy held its own, right? Or dollar held its own rather. Really wasn't able to make, it really just didn't break down, held slope support. So if you do see some recovery, further recovery in the dollar, I think this will give us an opportunity to reset. Ultimately, I would love to sell this again, but not here, right? Not here. So clean moves here on dollar Swiss. All right. Last but not least, we got two more. Let's hit dollar yen real quick, and then we'll hit sterling. So here's dollar yen. Um, and it's been a snooze fest for me. I haven't even looked at the scalp chart because, guys, honestly, all you need is this. So, you know what? You can even go out even further. Mike, what? You're trading off of weekly charts? Yeah, here's what you need to look at. Objective yearly open resistance comes in at 109.68. We've been talking about that zone at nauseum. 109.36 to 618 of the yearly range. We've also been keeping an eye on that range. That range has held the entire advance since the October push higher, when unable to do anything down here. A couple of weeks ago, we had a beautiful short opportunity from that range, fizzled out real quick, posted an outside weekly reversal. Then last week, we made another reversal candle higher, an inside week. And then here we are still holding that singular range that we made into the October open. So listen, on its face value, dollar yen is set up a perfect monthly opening range just below yearly open resistance. And it's a mouthful. But that's all to say is that you're setting a range right below resistance, right? So that's what we have to focus on. Top side break, you're looking for 110.50, you're looking for 111. Nothing to write about home. That's major clear-cut resistance targets on the upside if we break. Here's what it looks like on the daily chart. Here's your monthly open. Your monthly range high spiked right into the yearly open, 109.67, pull back, gave you a perfect 236 retracement from the advance, 108.48. Here's the reversal again, failure at this year's open, the opening range highs for the year, or excuse me, the open for the year still gives you 109 again, into that upside 109.67. So look, you also have this pitchfork, 1, 2, 3, median line break, acceleration, nice pivot at the 75% line, kind of messy there, but support, resistance, resistance, support, resistance, right? This is your world for dollar yen. A topside breach, you're risking 110.50. We're looking for 111, okay? We need to see a break of the monthly range lows to get a kickback from the upper parallel. You're looking for a drop towards the median line at that point. So look, it's not the cleanest setup, but I just wanted to highlight this because you don't get these too often dollar yen, okay? Here's your monthly open, big old round trip right into the yearly open resistance. I don't know if I talked to you guys about this on Monday or not on the webinar, but like despite all the disaster and all the hoopla and all the the massive swings we've seen, dollar yen's unchanged on the year. Despite all the disasters that you saw in sterling, or the Brexit, and everyone's saying, "Oh my God," and disorderly Brexit is gonna, sterling's gonna go to parity. Well, sterling's actually markedly higher on the year, right? So it's important. I love to use the end of the years, and I'm just regurgitating all this stuff to you guys because we just wrote our uh, trades of the year and lessons to be learned from this year. And these are the things that I touched upon because if you followed the headlines this year, you probably got massacred. You really did, because all the counterintuitive, the conventional wisdom, quote unquote, as it pertains to trading, is typically anything but. Okay. So look, dollar yen, you're at resistance. I'm looking for a move here. Again, a gunshot to my head. I think this thing probably pops through real quick and spikes higher to wash out the weak hands before it makes a larger decline. But I won't be involved here. Probably not until next year. And also, if you look at this from an Elliott standpoint, 1, 2, 3, 4, 5, you can make the argument that you need just one more low to execute some sort of correction before making whatever the next big move is. But at the end of the day, it is a simple range, not giving it any more respect beyond that. All right, and last but not least, here's the British pound. So finally, really nice play here. This is also one that we talked about earlier in the week. And here's what it looked like. So here's what it looked like into the close of last week. Just want to show you this real quick, right? The big zone that we rammed into was the 2018 open and the 2017 high day close. That gave us a range of 135.04 into 134.95 or so, right here As I was writing this report last week, that was the exact range that we were talking about. High risk for exhaustion there, near-term support 134.09. A break below the high day close from a couple of months ago would take us back towards the 32 handle and look for sort of a play there. Heading into the start of this week, or a couple of days ago, on the 16th, here's what it looked like. Okay, we had pulled back from that level on Friday, right above the March high day close where this thing settled. Okay, here's sterling on the daily. And we're looking for a move into 31.47. That's the break that would shift the focus for a larger recovery for the dollar, a larger setback for sterling on this run. And you're basically risking like 30.13 at that point, which is the former swing highs from up here. So here's the scalp look like. Want to see a move along that slope. Again, a downside break. You're looking for 31.47, and we got that, guys. So we're treading pretty steeply lower here. Here's what it looks like. 31.47 broke. And that's now near-term resistance. Now, look, the swing low from last week, 30.50. Don't be negligent. I mean, don't ignore it. I would be looking, if you're holding a short, it might be a decent area to maybe skim some off and bring your stops a little bit. But the next level I have is going to be that former swing high from the October opening range, and that's 30.13. So just some food for thought there. What's bearish invalidation? Well, look, it's tricky for me to call bearish invalidation on this one because let me take a step back. Put a pistol to my head, bearish invalidation is 33.10. Now, I don't necessarily think what is it that I want to say? If we get a bigger pullback, I'm still constructive this trade. So I do want to inevitably buy a pullback. But if this just rips from here, yeah, if it breaks through the March high day close again, if it makes it through 33, I think at that point, I'd be comfortable calling that bearish invalidation, sure. And I'm not a fan of still working with this slope. Remember, we talked about this. The slope has been so decent, except when it broke to the downside. Even the parallel kept on giving us some favor here. But I'm looking for some downslope resistance, right? So to answer your question as far as what would be bearish invalidation, I'd rather have a downslope to work with to better define that level than just give you a lateral level of resistance. Like something like this would have me better suited. I'd be more comfortable using this as bearish invalidation. I just don't know that this is a concrete slope. I mean, I just took a parallel from the high, but I don't know. Those two touches look decent, but it'll also give us this confluence region, right? Exhaustion point area of interest, former swing highs. Breakout, there's that 33 level, 33.10. If we get through that, I think you're looking for resumption. But just a near-term idea here for sterling. Does that make sense? Okay, and that is number 9, and that's everything on my lists. Crude, yes, Pete, I got you on crude. And by the way, before anyone asks, here's the SPX. I got no levels beyond here. I got no level. Even the near-term slope we were working with that held resistance early in the week, or earlier last week, I suppose that is, that already broke too. So, 32.40 is what I said yesterday. There's still a lot of topside room to go. Crude. One of my trades of the year, just to give you guys a heads up for next year, I do think you see, well, let me show you what I wrote about. This is the crude weekly chart. You see this long-term consolidation? Our trade last year was to look for bottoming in commodities, i.e. Look for a low and go long gold for 2019 and look for a low and go long crude in 2019. Now that's been largely a trade that's worked all year long. Except ever since that stretch in crude to the highs that we made in April, we've been in this consolidation. We're obviously markedly higher on the year, but we've been in this consolidation. So look, just a bigger picture, Pete. If crude were to break 64.40. I think you look for a reaction at 68.70. That's the tell. All things held constant within the confines of this formation, I still think you fail. You look for an exhaustion high early in the year. That washes out. And then inevitably that drop is what you want to get long on, either closer to slope support, bullish invalidations all the way down at 45. But until we clear this consolidation, sort of that's the main focus for crude prices, right? So Pete, just again, a quick view from 1,000 feet up on the weekly charts. Also, we'll be looking next year at this consolidation, this multi-year consolidation in momentum. It's got to give out. It's broken to the upside, but that break was not accompanied with a break in resistance in price. So it suggests, again, that non-confirmation suggests that the upside is at risk near term for the bulls. Absolutely. So here's what it looks like on the daily chart. So we're essentially, again, this is last year's open, not this year's open, and the 618 of the yearly range, or the decline off the yearly highs. And there's that basic slope off of just this year's high. You could probably make a little bit higher of a stretch into the close of the year, even towards 61.20s. But man, it's starting to look a little tired here. It's starting to look a little tired. On the intraday, here's this really near term. Here's a 240 minute basic slope off the lows, right? Here, boom, boom, boom. Still think the risk is for exhaustion. That's why I said early in the month, or early in the week rather, as soon as we open the week, we pivoted back above that key zone that we were tracking. But here's resistance at the upper parallel. And again, in my mind, I still think this one's a little bit of a risk for a larger washout near term. So just something to keep note of there, Pete, as far as initial advance. And not to mention, you're coming up towards the upper bounds of the multi-month consolidation range. So I'd be looking for a reaction up here. Make sense, Pete? Thank you. Merry Christmas and a Happy New Year. Hey, same to you. I want to thank all of you guys for giving us another great year together here on SB. Many more to come. Thank you so much. We're going to miss your webinars. Hope you enjoy your trip to the max. We will see you on the 30th. Iman, same to you. Happy holidays and a Merry Christmas to everyone here in the room, guys. I wish you all an awesome new year, to great success in 2020. And hopefully the volatility gods will continue to shine upon us and give us more of these great moves heading into the start of the year. Jay, Merry Christmas. Pete, Iman, Pooja, Steve, again, wish you all the best. I will see you if you're around on the 30th on Daily FX. If not, we're going to come right back on SB with that following week to kick things off and start off the year on the right foot. Cheers, guys. See you all then.